IDBI Bank's Deputy MD has said that they expect a 40 to 50 basis points impact on CRAR due to the new norms by the Reserve Bank. Listen in.
As far as IDBI Bank is concerned, we have a minuscule book in the personal loan and as well as credit card. It is in the range of 850 crore or so put together. And even if we include the lending to NBFCs, other than the HFCs and gold loan, impact could be of about 40 to 50 bips only. But I think this is a very good measure taken by the RBI. RBI has been signaling this for some time. That is because of the growth of the unsecured loans in the industry as a whole, particularly after the fintechs have come, after the pandemic. The discretionary spending has started growing and people have started using it, and more than that, the banks are also comfortable lending it because they have developed various measures, processes, digital lending journeys are there, source of informations have grown for a proper underwriting. So I think having both sides, demand and supply matching, right, I think there is a growth happen. But sudden growth coming is also maybe not correct. So RBI has taken a right measure of bringing stability in the financials of the banks by increasing a 25% risk weight, which would not really matter much for the banking industry as whole and will not matter on the growth of the business. Today, most of the banks have a very good capital position, and this small dip will not cause any business growth. So I think it's in the right direction. It will bring a lot of stability to the bank's balance sheet.
Right. Your own book has capital adequacy ratio of over 21%. So even if we account for 50-60 basis points, it will still be closer to 20%. But do you think that you have enough on your board for continuing the kind of growth, 14% or something which you have guided, that capital is enough, or you may want to raise somewhere down the line?
No, I think given the kind of capital cushion which we have, and plus we are continuously incurring profits,
right,
I think there is no need. We continue with our guidance, and for at least next 2 years we have a growth capital availability. So we have presently no major plans for raising any capital.
So the guidance is intact, the capital adequacy ratio by far is intact, but I want to know that the festival season is just over. What is the on-ground situation? Do you think there has been good business for the bank and particularly IDBI Bank?
So second half year after the festival seasons are over, and festival seasons have also going on, some festivals, I think it is always good, always encouraging, and activities are growing. There is an uptick in the SME sector also. We see the growth is coming from the major core sectors also. So I think growth potentials are there, and it continues, and industry is doing good. So I think it will be a better position.
Right. When you say better, and I'll take that word because you say that second half is, and generally, and this is seasonally better than the first half. You have been quite conservative in your growth guidance, but you have delivered more than that, and that has been happening in past 2 to 3 years particularly. Can we expect this from IDBI Bank again this year, despite the little steps which has been taken by Reserve Bank of India?
No, these steps of Reserve Bank of India will not dent any growth of, that is, we are very clear. The growth will continue to happen. Only thing is segments which we want to choose will depend on the environment and the requirement and the risk policies of the bank. So I think we continue to stick with our guidance which have been given.
Right. And when you say this about the growth guidance, I also want to clarify that you have a projection of 65-35 corporate to retail portfolio. That stays from whatever situation, I mean, that guidance stays?
See, today we are 70-30. Yes, we are aiming to grow it to 65-35. We are also actively looking at many mid-corporate sector advances, large corporate sector advances also. That will help to slightly shift the ratio from 70-30 to 65-35. That is what we are planning.
And this should happen this year, or you planning to achieve it later?
Maybe it happens in the next financial year.
So by next financial year, 35% of your portfolio will be corporate and 65% of the portfolio will be retail, and you will be aiming more for housing loans?
No, housing loan, we are already there. We are coming out with various other products just to increase the basket of the products.
Right.
So I think we will introduce many more products which we have lined up, and this will be all customer friendly, more of a digital products which will come out.
And last question I would want to ask about the IDBI divestment which is underway. Last when we met Deepam Secretary, he said that the process is on. It is Reserve Bank of India who's deciding on the eligibility criteria, fit and proper criteria. What are you hearing? Is there any chance of this happening in next 6 to 9 months, or you think it may take longer?
See, as far as we know, we are continuing to improve our all financial metrics, and bank is doing exceedingly well quarter on quarter, which will continue to do. As far as the information which you have, we also have, because Deepam is handling, that's the information. See, it's a process, divestment. It requires fit and proper clearance by Reserve Bank of India, due diligence, valuations, so on. So it takes its own time. But as it is indicated, it will happen towards the end of this fiscal year or the next year. We also feel that way it will happen.
Right. And when this divestment process was started, as a bank, as balance sheet, it was not that better, which has been grown past 1.5 years. Do you think it gives more power to government to get better offers on the table?
Naturally, the bank balance sheet has become quite attractive on all parameters. So finally, it will come up to the valuations.